These are 10 of the top dividend stocks right now for 2025. Together, their yields beat the market, and combined, they earned more than $3.6 billion this past year. In this video, we're covering all of them and saving the best until the end, starting with number 10, Ethan Allen Interiors. Ethan Allen is a $700 million business trading under ticker symbol ETD. Today, it trades just $2 above its 52-week low. Ethan Allen is an interior design company and a manufacturer and retailer in the home furnishings market. Today, just two super investors hold this stock. Although it's a small holding, they both bought in the last quarter. Right now, Ethan Allen pays a nice 2.8% dividend yield that they've grown 6 years in a row. Ethan Allen looks potentially very attractive compared to their projected free cash flows, and they're also trading below their gram number. The company, though, is just a little ahead of their historic price to sales. Overall, analysts are looking at a downtrend in the home furnishing industry, and that's why a GF value comes in at only $22 per share. That's 26% below today's stock price. We're looking at the top dividend stocks in 2025. Most of these businesses are deeply entrenched with well-established moats. Based on the huge amount of money they're paying out to shareholders, they may be interesting companies to look at. Plus, there are some themes on our list that are going to stand out to you and may surprise you. Keep in mind, though, the video isn't financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now, let's keep looking at our list. Next at number 9, we have Oxford Industries. This is a $1.3 billion market cap company that's $10 above their 52-week low today. Oxford's the parent company of design brands Tommy Bahama and Lilly Pulitzer. Oxford Industries pays a market-beating 3.23% dividend yield that they've grown 4 years in a row. Right now, no super investors own Oxford Industries as Lee Ainsley sold out of the stock in the third quarter of 2024. However, the company has been a long-term compounder throughout its history, especially since the end of the 1990s until recently. Its numbers look good here, with the stock's valuations coming in at their earning power. They're well below their projected free cash flows and also trading below their historical sales. However, the stock is out ahead of their gram number. Still, a GF value comes in at $110 per share, which is 25% higher from their current stock price. At number 9, we have Energizer Holdings. This $2.5 billion company trades under ticker symbol ENR, and it's the parent company of Energizer Battery. Today, they trade right in the middle of their 52-week high and low. Energizer is also not owned by any super investors after Lee Ainsley exited the stock in the third quarter of 2024. Right now, the company pays a market-beating 3.5% dividend yield. Today's numbers don't look as good as Ethan Allen's or Oxford's. They're trading above their projected free cash flows and also out above their earnings power. They also have a negative tangible book value because of the high debt in this business. These more stretched valuations are part of why a GF value comes in at $30 per share, 14% below today's stock price, even though that's down just under $5. The 7th stock on our list is TFS Financial Corporation, trading under ticker symbol TFSL. The stock today is a $3.5 billion market cap that's right between its 52-week high and low, even though this hasn't bounced around much. With a steady history of dividend payouts, TFS pays a super high 9.1% dividend yield today. No super investors own this one, and they haven't for a very long time, although there was some open market insider buying back in October of 2024. That, however, was just for less than $15,000 overall. TFS Financial is the holding company for the Third Federal Savings and Loan Association of Cleveland, Ohio. While the company today trades below their historical price to sales, they're above their gram number and above their earnings value as well. Remember that earnings are one of the best ways to value banks, not free cash flows or their tangible book value. Today, it looks like the stock's trading around their fair value, with this coming in at $14 per share, just $1.50 above their current stock price. Dividend stock number 6 is Vail Resorts, with the very cool ticker symbol MTN. This is a $6.7 billion market cap company trading just $13 above their 52-week low. Vail pays a big 5% dividend yield that they grew by nearly 8% last year. They've grown their dividends 3 years in a row, and they also bought back 3.6% of their shares last year. Altogether, this gives shareholders a huge 8.6% yield overall. Right now, 3 super investors own Vail Resorts, and this is led by John Rogers of the Aerial Appreciation Fund. Go figure, Vail operates mountain resorts and ski areas. Historically, their stock has performed very well at different times, especially since the global financial crisis until around 2022. Since then, though, their stock price has been cut in half from their all-time highs. Today, Vail trades at almost half of their historical sales, but they're well above their projected free cash flows or their earnings, even when the growth is included for their future. Still, they have some very unique assets, and that's why a GF value may come in as high as $261 per share for this business. Keep in mind, though, this does come with a possible value trap warning. Now, cracking the top 5, at number 5, we have Dillards, the department store. The department store trades under ticker symbol DDS, and it's a $7.3 billion market cap. Right now, it's down $32 from their 52-week high. Dillard was last owned by Lee Ainsley in the second quarter of 2024. Before that, Ted Weschler, one of the investment managers at Berkshire Hathaway, bought this stock during the pandemic. This was in his personal account, and from the time that he bought it until when he sold, this stock was more than a 10-bagger for him. Things have gone sky high from their lows during the pandemic, and since then, they've been one of the top-performing stocks in the entire market. Right now, Dillard only has a 0.22% dividend yield, but they grew this by 11% last year, and they've grown their dividends 12 years in a row. Together with their buybacks, they have a 3.5% shareholder yield overall. That's really strong performance for a quote-unquote dying department chain. And even with this huge growth, the company still looks potentially attractive based on the numbers. They're trading below their earnings power and their projected free cash flows. However, they're well ahead of their historical sales and their gram number, so that is something to keep in mind as well. Analysts are predicting that things are going to decline in the future for this business, and that's part of why a GF value only comes in at $354 per share, down 26% or about $100 from their current stock price. The fourth stock on our list is Openex, trading under ticker symbol OTEX. This is a $7.6 billion company that's just $1 above their 52-week low. Openex is a cloud-based information management software and solutions platform. Right now, no super investors own Openex after none other than Lee Ainsley sold out of it in the last quarter. Today, Openex pays a big 3.7% dividend yield that they've grown 8 years in a row. This includes 4% growth last year alone. Currently, Openex trades well below most of their historical numbers. They look very good compared to their sales, earnings, and cash flows, so this may be a company to take a deeper look at. Their GF value also comes in at $49 per share, which is up 42% from their current stock price. Skyworks Solutions is the third stock on our list. This $14 billion company trades under ticker symbol SWKS. Today, it's up just $7 from its 52-week low. Skyworks today pays a 3% dividend yield that they grew by 6% last year alone. They've had dividend growth for 12 straight years. Hancock Classic Value is the only super investor with a holding in Skyworks. This makes up 2.6% of their portfolio. Skyworks creates semiconductors for wireless handsets. Its main products include power amplifiers, filters, switches, and integrated front-end modules to support wireless communication. The company also looks attractive compared to their sales, earnings, and their cash flows. They're trading ahead of their gram number and their Peter Lynch values, and also well ahead of their tangible book, but there's a lot of growth being projected in this business as well. Still, semiconductors and wireless are cyclical industries. That's part of why their GF value only comes in at $88 per share, down $5 from their current stock price, or roughly in line with their fair value. Best Buy, the $18 billion home electronics retailer, is the second dividend stock on our list. This trades in the US under ticker symbol BBY, and today it's in the middle of its 52-week high and low. Right now, Best Buy pays a huge market-beating 4.44% dividend yield, which they've grown 9 years in a row. They also have some buybacks and have a 5.7% shareholder yield overall. Best Buy is owned by 3 super investors, this being led by the Mayors and Power Growth Fund with a 1.2% holding. It's hard to imagine it now, but at one point, Best Buy was one of the top performing stocks in the market. From 1997 until 2021, this was a 100-bagger in just 24 years. Right now, Best Buy looks like it's trading in line with most of its historical numbers. They are priced below their earnings power value, but that's not taking into account future assumptions. Maybe things are just a little on the high side, but a GF value comes in at $75 per share for this business. Now, are you ready for the number 1 dividend stock on our list for 2025? This is, drumroll please, Tyson Foods. Trading in the US under ticker symbol TSN, this is a $20 billion family-controlled poultry processing company. Right now, their stock is in the middle of its 52-week range. Tyson currently pays a 3.6% dividend yield that they've grown 4 years in a row since the pandemic. Before this, the company had a strong history of dividend growth that they're hoping to return to, even though this was cut in their fiscal 2021. Tyson's another business that's been a long-term compounder since the 1970s, even though they're still down 44% from their all-time highs. Today, Tyson's trading below their projected free cash flows and below their historical sales. The company's earnings aren't quite there, and that's why their gram number comes in pretty low compared to their stock price. Overall, a GF value comes in at $61 per share, which is about 9% higher than today's stock price for this business. Let me know if you want to see a future video on any of these companies. The variety of industries on this list was a major surprise, but we even saw a few retailers. If you enjoyed the video and you want to support the channel for free, click the first link in the description. This will take you to Global Values affiliate Interactive Brokers. Thanks for watching and have a great day.